current panel, led by Tommaso from the International Monetary Fund, will now discuss the proliferation of stablecoins together with Danielle Dixon from Stella, as well as Jeremy of Circle. Everybody, please enjoy.
Good morning. I'm Tommaso Mancini from the IMF, and I'm delighted to be here on this panel on stablecoins with Jeremy Allaire and Danielle Dixon. Danielle is the CEO of Stellar Development Foundation, and Jeremy, the CEO of Circle. And today we're going to be discussing stablecoins, central bank digital currencies, and focusing on issues of interoperability, including in cross-border payments. So before we begin, perhaps for the benefit of the audience, I could ask Danielle and Jeremy to give us a very brief overview of the main mission and products of each of your companies. Danielle first.
Sure, thanks so much. This is great to be here. The Stellar Development Foundation's mission is creating equitable access to the global financial system. And our focus is doing that through the use of this open decentralized network, which is called the Stellar Network. And we believe that by connecting the network to the existing banking infrastructure, we can actually touch those that are unbanked and underbanked all over the world.
Thank you. And Jeremy?
Sure. Circle's mission is to raise global economic prosperity through programmable internet commerce. And we very specifically are focused on how can we take the benefits of public blockchain infrastructure, digital currencies, and the programmability of money that comes with that to really transform how the world economy functions, and in doing so, raise prosperity for everyone around the world. That's the high level focus. And then, specifically Circle operates a set of, financial platforms and services that provide payments infrastructure built around stablecoins. We're one of the leading issuers of one of the fastest growing stablecoins in the world, US dollar coin, and offer services to businesses that want to build on top of that.
Excellent. Thank you very much. And with that, we'll dive right in, and we'll start with the question of central bank digital currencies. And as you know, there's an increasing number of central banks around the world considering the option of introducing a central bank digital currency that they would issue directly to the public for retail use. And the central banks are thinking about doing this for a variety of reasons. Some to economize on cash management costs, some for financial inclusion purposes, some for resilience because they see the payment system being increasingly in the hands of large private companies, and some simply to compete against the big tech firms that are introducing new means of payment, and in order to remain relevant. So it's actually very interesting for us at the IMF, who go around and speak to countries around the world, to see diversity of reasons that central banks give to be interested in central bank digital currency. And so this may become a reality relatively soon. And my question to you, Jeremy and Danielle, is if central banks were to issue a full-fledged central bank digital currency to the public, would you still be able to remain in business? Would the central bank digital currency be a formidable competitor or not to your business model?
I'm happy to take that just to start. I think the kind of mission and vision and really, frankly, the product strategy that we have as a company is really it's predicated on the idea that digital currencies that are based on the leading reserve currencies of the world, that those exist and that those can be used on the open internet, on open networks, in interoperable ways, and that the benefits of things like smart contracts and the programmability of this are available. Because if those things exist, we think that the world of payments is transformed, but more importantly, the way in which economic actors can enter into relationships with each other, whether it's people or businesses or both, can really be transformed. So from our perspective, we're sort of long on digital currencies that work on the public internet that are based on leading sovereign currencies. We're very long on that idea, and right now that's really happening through private sector innovation in many cases. And as you note, there are some public sector projects as well. But in my opinion, if just say the Federal Reserve said, you know what, this is something that we want to be sort of directly involved in, as a financial institution that's providing platform services to businesses to take advantage of this innovation, we would love to work with the Federal Reserve to utilize their digital currency as well. So from a business model perspective, a product perspective, and even a mission vision perspective, these are not in conflict with each other necessarily. There's a whole separate discussion around whether that's the right thing to do or what's the role of public sector versus private sector, which I know we're going to talk about.
Yeah, and from the Stellar
absolutely.
Development Foundation, from our perspective at the Stellar Development Foundation, like our network is set up perfectly for CBDCs to be issued on Stellar. And we actually, there's so many different ways to be able to get this out to the public, but we would love to see this. This is a way that governments can get in contact with those users out there that currently don't have a bank just down the street to be able to get to them, but could use a mobile device to be able to connect up with the banking infrastructure, for example. So from our standpoint, CBDCs actually enhance not just our network, but just the financial system as it exists today.
Mm-hmm. Very interesting. So you both actually have the view that CBDC would be complementary to your business model. And in fact, what is interesting is that central banks themselves are looking to the private sector as a potential partner, as a potential complement to CBDC. And so this idea of a public-private partnership is really starting to permeate the circles of central bankers. In fact, with Tobias Adrian, who is the director of the Monetary and Capital Markets Department at the IMF, and we wrote a paper last summer on public-private partnerships in CBDC. We call this synthetic CBDC. And our view was essentially that the private sector could issue tokens, could settle payments, but the central bank would regulate this issuance, would ensure that issuance would be fully backed with central bank reserves, and then would supervise, of course, these entities. So the private sector has a comparative advantage in dealing with customers and in innovating. So we give that to them. And the public sector has a comparative advantage in regulating and providing trust. And so the public sector retains that function. So that's one way to do a public-private partnership, synthetic CBDC. But there's another way. And the other way is for the public sector to issue tokens and settle payments, and for the private sector to distribute tokens. And that's very much an application to the digital world of how we deal with cash today. So cash is issued by the central banks, but they're distributed by commercial banks. So in that arrangement, the private sector would be in charge with interfacing with clients, but not with innovating and providing a technology. So those are two different models, and central banks around the world are wrestling with which of these two models is the right way to go. And I'd like to ask you for your opinion. Where do you stand in this debate? What do you think makes most sense to stimulate innovation, competition, the continuous evolution of technology? And what would maximize consumer welfare in your view of these two models?
I'm happy to take a crack at. Go ahead, Danielle.
Go ahead. I'll just jump in and say, from my standpoint, I think so long as we actually had a structure where we have standards that are issued. So in either model, I think you would need that structure. So from my standpoint, interoperability is the most important piece. I think that innovation is an important piece that we. I don't believe that we've lost it on the content side of the web, but I do think that it became more challenging on the content side of the web to innovate once we had a few entities that sort of controlled that content. And I would love to get us to a place on the payments infrastructure and using digital payment rails where we actually continually have that innovation. And I think standards are the way to do that. So I think in either model, you need to have that standardization that's sort of set in a way that allows interoperability. So I'm open to either model. I do think innovation is an important piece of it. And so I have a slight preference for the first model, which is to allow that the issuance and the innovation to occur at the private level. If we can continue to keep those standards to be utilized and promulgated, but then also like improved upon over time, I have a slight preference for the first model. But I think either could work as long as the central bank is not the entity that's engaging with the public. Because I don't think the central bank has that infrastructure today. If I'm just taking, for example, the U.S. central bank and many others that we've talked to, they don't have that infrastructure to have that one-on-one relationship with the actual end user, which would be the consumer. I think that either model could work.
I would echo those thoughts, and I think there is this sort of these different worlds colliding, right? You have the world of the internet, which has been built in a particular way, and there's some incredibly positive aspects to this public open networks, permissionless networks, decentralized infrastructure, open technical protocols, open source software. Like that's the DNA of the internet, and it allows billions of people to interact and do amazing things. There's private sector concentration of power on that as well, but fundamentally the infrastructure is this open, permissionless standards infrastructure that's not controlled by any government. It's not controlled by any private sector actor. It is truly a public good. That world colliding with the historical financial system, which has been much more tightly controlled, which has often been operated on standards that are set either by large private sector actors or by governments themselves, typically kind of stovepiped by nation state or region. And those worlds are colliding now. And I think it's a great thing. And I think, my high level view here is that, echoing again what Danelle is saying is we really need to let what the internet does well continue to do that. And for the first time, we're actually seeing a very bottoms up creation of a new infrastructure layer for the economy. And it's bottom up in terms of what I think of as like the operating system layer that's being created, which is blockchains themselves. It's bottom up in terms of the protocols that are being created, or the app or protocol layers that are being created on top of that, i.e., stablecoins and fiat tokens. And we're starting to see standards organizations emerge, associations, consortiums that are, focused on trying to bridge the world of regulatory requirements, compliance requirements, things like reserve requirements, these sort of what the FSB is calling global stablecoin arrangements. We're starting to see some of those emerge, which really can be both standards bodies but facilitate the kind of technological development that the internet has made so amazing, and has made projects like Stellar possible, just an open source project. And so many of these are open source public intellectual property things. And sort of the top down, like, we're a big country, we should get a big R&D project and go build something and then put a stamp on it and say, this is what we're doing. I don't think that works in this world. I think that governments around the world are going to have to yield to the open internet and figure out how to participate in that. And they haven't had to do that in the financial system. They've had to do it in almost every other sector, the transportation system, the communication systems. Like, the International Telecommunications Union and the FCC would have been the bodies you would have thought about who are controlling, how we communicate or how information is broadcast. They have nothing to do with that now. We're having this peer-to-peer video conversation. There's no government regulator involved in that. It's just software and open protocols on the internet. So that's coming to the financial system. And so I think the really key role for central banks is to figure out, of course, they need to play a central role in the actual monetary supply, the setting of the price of money, as it were, the issuance of that, the lender of last resort, the supervisory standards for intermediaries. But do they really need to get involved in building standards and infrastructure and so forth? And I don't believe that they do. I think there are some exceptions to that around the world, clearly. But my broad view is that this is a place where so much can flourish through these multi-stakeholder associations and consortiums where stakeholders include central banks. It's not to say that central banks aren't major stakeholders. Yeah.
Yeah, let's talk about this interoperability issue a little more, because you've both spoken about, I mean, you both seem to think that innovation is obviously important, and that it should be left to the private sector as much as possible. Now, of course, central banks would remain involved, and in this synthetic CBDC concept that we just discussed, the central bank would license a private sector company to participate, to issue tokens, and the license would ensure that there's operational resilience, governance standards, et cetera, et cetera. But very importantly, the design, the fundamental design of these payment tokens would also be determined by the central bank. And specifically in this case, the design would call for one-to-one backing with central bank reserves. So that's all fine. But then when I think about this, I see a world of multiple private sector players, each issuing their token, following the central bank license and adhering to all the regulation, but a multitude of issuers, each with their own technology. So it's great for innovation, but what about the interoperability? I want to be able to pay somebody who holds a different token, issued on a different network, on a different blockchain. And we know that private companies are going to resist this interoperability. They're going to try to lock in customers. They're going to want to grow their networks. And clearly, from a policymaker standpoint, this is a problem. We're creating monopolies. And so how do we ensure interoperability between digital tokens issued on different networks? Is there a way to incentivize the private sector to respect and to build in interoperability? And then we can speak a little bit more about setting standards later. But your first view on how to solve this problem of interoperability and potentially creating incentives for interoperability. Danelle, do you want to go first?
Sure. I think it's really interesting. One of the things that I don't think we've done well on with the web as it exists, and frankly, if you think about open standards, is that we have this infrastructure that allows all this communication and all this opportunity all around the world, and that has remained open. And that has remained in a space where everyone can contribute to it, and also folks are it's easy to connect up to it. The layer on top of it is the layer that's been really created those walled gardens around it, so that you don't actually have the ability to have federated IDs and federated communication between them. Although, if you think about it, email has been one that actually has been able to create that opportunity where you actually can go from one network to another. So the private sector has actually determined a way to make it so that it's still useful for them to maintain this email infrastructure, even though it's going between and you're having these federated addresses all over. I think if we actually were to think about the issues that you can still actually delight your customers and try to maintain your customers within your sort of space in this open infrastructure, if you are constantly in competition with someone else out there who is trying to do the same thing, but you're not allowed to create a wall that's so big and so deep that you actually don't have a way from a federated standpoint to get in that wall. I think we can do that. And I think that it's something that I think should be incumbent when you're dealing with money, particularly when you're dealing with money, that you shouldn't actually select a winner because that winner will then have no need or desire to be able to have to innovate and to change. And frankly, that's sort of where we are today. If you think about the existing financial infrastructure, it hasn't changed in years and years and years. And it's because we've had these isolated walls around each country, each geography, however you want to define it, and they haven't been required to actually change. And therefore, interoperability hasn't been achieved. So I think once we achieve it, we have to make sure and put standards around it to enforce that and to enforce that interoperability so there isn't one player that wins.
Yeah, I totally agree. We've said for a long time, the opportunity with public blockchains is to create an HTTP of money, which is the idea that there are standard protocols that everyone can agree on, and that there are bodies that come together to improve that and contribute to it, with lots of companies that compete with each other to do that. I mean, obviously, Danelle knows this incredibly well from the work at Mozilla and web standards. And yeah, absolutely. But web standards are such an interesting example of that, where Google and Apple and Microsoft and Mozilla and all these other groups basically saying, hey, we need a standard for how audio and video communications happens on the web. And we don't want everybody doing their own thing. So, web, RTC, just a little bit of a tangent here, but that's a standard that every browser in the world implements. And that means that you can connect into these video calls seamlessly, no matter what people are using. And that's what we need here. And I think we're quite close to that, actually. And I think, having standards for the settlement of fiat tokens, the issuance and settlement of fiat tokens is something that we're personally working a lot on as a firm and in contributing that IP to other organizations. But I think it is something that we're getting much closer to and realizing those ideas. And I would also just remind the folks who are watching this that the first generation, the first two generations of electronic money are associations of standards associations for interoperability. SWIFT is a member-based association of commercial banking institutions. It's multi-stakeholder. It defines a set of electronic messaging standards. That's how money moved in the global financial system, still does in many ways. And the second generation of electronic money, which we all take for granted, is the IOU reconciliation engine that we call card networks, which is essentially a way to represent the IOUs between counterparties that are regulated financial institutions. And it's a set of interoperability standards so that every issuer can be interoperable with every acquirer. And there are multiple schemes like that, and those exist at massive scale. And I think we're now, with things like stablecoins and fiat tokens and what's taking place, we're seeing the birth of arrangements that are the next generation of electronic money and digital currency and its benefits. And it's quite a significant advancement over those earlier electronic money systems. And in both of those first two cases, it's not like central banks stepped in and said, we got to run this. We're going to run this stuff. They didn't. They said, no, well, what we do is we issue our money supply and we set, safeguards, and we make sure that if you are in one of these arrangements, that you are properly regulated. And I think that can be the same thing. And I think that's very, consistent with the synthetic or hybrid CBDC, models that are being discussed right now.
And so both of you are suggesting that standards here are really at the heart of interoperability. Standards, perhaps on network design, on token design and settlement, standards on wallet design, potentially, so that they can accept multiple different tokens. Who should set those standards? Just the private sector, a consortium of private sector firms? Who should participate? Should the public sector be involved? How long does it take to set standards? Is it reasonable? There's a lot of skepticism among policymakers on standards, because we know how difficult it is to bring actors together and agree and reach a consensus on things such as standards. Jeremy, you alluded to various examples of where standards do work, but my question to both of you is very simple. Who should be setting these standards on network and tokens and wallets? Danelle, do you want to go first?
Well, we already have standards bodies that know how to operate very well on the web. And I think that, yeah, it takes a long time to set standards in terms of making sure those standards actually work and will work across networks and will work in different ways. But a long time is actually just a process of ensuring that everybody can plug into those. So like web standards didn't take forever to get set up. It actually was a relatively streamlined process. And even today, when you bring something to a web standards body, it doesn't take a period of years to get through. Sometimes, if you actually can demonstrate that there's value and there's interoperability and that there's ways for everyone to plug into it. I actually think that we have standards bodies that are emerging within our industries. And I think that those could actually leverage themselves. And I will tell you, and I will agree, that there are opportunities for folks to come in and try to ram through standards because they have a lot of power in the industry, and we have to watch for that. I think it's a multi-stakeholder process. I think it's the private industry. I think the public sector could actually participate in that as well, but not by setting the standards themselves, but by listening and learning from the different players that come to it. So I think the most important part about a standards body, if we wanted to get very specific about a body that could be set up for this, in terms of focusing on the financial structures, it would need to be a body that has multiple different stakeholders, has the public sector that can come in and participate on some level, because they know how to regulate fiat currency very well. But we actually have these bodies that exist today, and we would just have to expand them. We're already operating in that methodology today in terms of, sometimes we actually go to standards bodies from the web standards groups to talk to them about how we could actually get these standards set. So I don't think it's actually that far off.
Okay, thanks. Jeremy, anything to add briefly? Because I'd like to also touch on cross-border payments if possible.
Yeah, sure. I will echo what Danelle said, and I'm very passionate about it and trying to establish some of those early standards bodies like Center Consortium. And I think this is ripe for multi-stakeholder engagement, ripe for regulators and central banks and others to participate in. And I think we're going to see a lot of accelerating development in that over the next year or so.
Great. Thanks very much. And what I'd like to do in the last 5 minutes that we have is take a step into the international or cross-border world. So I think what we've been talking about until now, central bank digital currencies, et cetera, is a discussion focused on domestic use of money. But cross-border is obviously very important. We make payments to foreign companies when we trade. We send money abroad when we send money to our kids who are studying abroad, or simply when we buy assets abroad. So, interoperability is going to be is going to be just as important, but more difficult to achieve. It's one thing when you bring in domestic actors and agree on standards. Another thing when you bring in international actors to agree on standards. There's another thing, which is interoperability, it seems to me, and I'd like to hear your views on this, goes beyond technological interoperability. So it's one thing to be able to receive a token issued by on another network, but it's another thing to be able to hold a claim on money held abroad, issued when you hold a token issued by a foreign company. So to me, there's a legal aspect to interoperability as well, which may be a barrier when you move to cross-border payments. Do you see that as a problem? How do you think of interoperability going beyond just technology? Jeremy or Danelle, do you have views on this?
Let me just jump in quickly and say that I actually think that there are legal issues within each geography that, there could be implications of remittances and taxes and how the each region and how each country actually represents itself with that. But in terms of interoperability, as it is today, just take the Stellar network itself, which is one that I know well enough to be able to articulate on this, is that you could actually have a USD token, you could have Circle, and then you could take that, make that, and you want to send money to your family in Brazil, you could actually do that through the network itself. And then they could actually, it could be, we have a decentralized exchange on the Stellar network, and you could exchange that for a payment that goes and is in Brazil's local currency, so long as there's an anchor on both sides of it. And our anchor, in our terminology, an anchor is a financial institution that can redeem. It can be an on-ramp and an off-ramp for those assets. So it's actually quite simple. What you have to deal with is, on the other side, making sure that you are respecting the regulatory processes of the region that you're going into or out of. And I think that we actually have processes already set up for that, from making sure that you have KYC and AML, which is a lot of what's required in those geographies, in all geographies. But I don't actually think that the legal requirements are going to be for the financial institutions that are actually operating on those edges and getting you on and off the technology layer. The technology layer, which is the blockchain, is this foundational infrastructure that anyone can participate in. If it's a global open network like Stellar, then anyone can participate in and become a part of, and permissionless, right? So you can just join the network and be part of it because it's the documentation is set and it's easy to do. So I don't think actually the fiat to different fiat, digital to fiat to digital, digital to fiat on each side is actually really well structured within the blockchain networks themselves.
Interesting. Jeremy, anything to add on that?
Yeah, I mean, I think, stable coins on public blockchains are just an amazing innovation that allows digital cash to exist everywhere that the internet exists. And I think it is way ahead of the law. And I don't mean that in a bad way. I just mean like this is a breakthrough. It's a new reality that you can have a digital asset that exists even intergalactically, because the internet, is now in outer space. But the point being that the internet doesn't think about borders. The internet thinks about just IP addresses and these digital tokens. They don't actually exist in a physical geography. They exist on a blockchain. The blockchain is replicated everywhere. And so I think a lot of the things that have to do with data, with borders, and the law of the movement of money, it was conceptualized for a very, very different world. And so my view is we should embrace what has become possible, which is that basically value in any currency can move instantly everywhere in the world at virtually no cost, can be utilized in very powerful new ways. We should embrace that. We should embrace the transformative potential of that for the world economy, and figure out what are the risks that have to be managed. Or those risks have to do with a sovereign's ability to, say, control their economy, or a given set of constraints or concerns around the abuse of financial instruments by criminals. But what are those risks, and how do we address those in a world where you have ubiquitous, digital currency that can exist, everywhere all at once? So I think the notion of a cross-border payment, for example, will be an anachronism. I think in 5 years, the concept will be as foreign as saying, I just sent a cross-border email, or I just, browsed an international website. It's just that those concepts don't exist on the internet. And I think that's going to be the case with money very, very soon.
Right. No, that's it sounds wonderful. I hope that we get there. I think that there may be some legal barriers to making it so simple, because you do hold claims against foreign institutions that are sometimes difficult to enforce across borders. So we have to recognize, I think, that reality. But I think that vision seems very attractive, and one day we may even have exchanges for these tokens, so that when you send me, if I'm in Japan and you're in the US and you want to pay me, I don't receive your dollar stablecoin, but you go on an exchange, exchange your dollar stablecoin for a yen coin, which then you send me.
But we have
then
those
I
today.
have a claim on some sort of domestic institution.
Right. We have those today. I mean, digital asset exchanges do that today, and they're going to list all these stable coins, and decentralized exchanges like what operates on Stellar and on other blockchains exist today. And that can be done automatically, programmatically. And so that's already here. So it's really about, more legitimate issued stable coins in more markets. And then I think we'll have real-time liquidity across currencies.
That's right.
And settlement for everyone. Yeah.
That's right. Excellent. So I'm told that we need to wrap up. This has been a fascinating conversation. Lots of food for thought. I would like to just ask you a very last question. What is the main message you would send to policymakers today? Very briefly, what is your main message to policymakers? Jeremy, do you want to go first?
Oh, okay.
No.
Go ahead.
Yes, go ahead.
I'll just say that I think I would love to engage with more policymakers all around the world, and don't be afraid of this technology. This technology is actually going to enhance what you've already put into play. And there's not a whole lot of work to be done here, because there's already regulation. You know how to regulate currency, you know how to regulate fiat, and this just plugs into that. And so don't be afraid of this. We want to engage. We want to explain this technology. Again, this is just foundational. What you've already laid is just another thing that we can go on top of. So I think that this is a great opportunity for the globe to be able to be more connected.
Yeah, I totally
Thank you,
echo
Benel.
those
I had
sentiments.
wanted to leave you the last words, but your enthusiasm took over, and I think those are very encouraging words for policymakers, not to be afraid of this technology, to look into it, to understand it, and to collaborate with it, see how it can be guided with regulations so that it becomes safe and efficient. Jeremy?
I echo, again, a lot of what Danelle's saying. And I think, really, this is a time to engage. It's a time to dive in and understand this. There's an incredible community of creative technologists, of entrepreneurs, thousands, tens of thousands of them in every corner of the world today that are innovating in crypto and blockchain and really trying to build this new type of global economic system that is more fair, more inclusive, more efficient, and that really does connect the world, more deeply economically. So it's a tremendous opportunity, and we need policymakers who want to help, build the future. And I think likewise, I think it's a tremendous time for engagement.
Wonderful. Thank you so much. I think the fact that we were all together on this panel, you being the innovators and I, the policymaker, is a very good signal that we are trying to bridge this gap. So thank you again very, very much for a wonderful panel, and enjoy the rest of the afternoon.
Thank you.